Hi everyone, welcome to today's video where we're going to talk about Tesla and why you shouldn't marry the stock and should really consider investing in the company at times where the valuation is a little bit overextended. And also, as I mentioned in April of last year, there are times that Tesla is undervalued, which it clearly was in my opinion in April of last year, April last year. That's why I made that video in April and felt essentially that it was a really good buying time. Over the last couple of months, I made a couple of videos about Tesla where I believe the company is kind of a little bit overvalued right now based on the fundamentals. If you look at the long term, you could argue that this is a fairly okay buying opportunity, but why isn't right now the best buying opportunity? If you look at this graph here, you can see in the blue, starting from 2021 quarter one, the average sales price of Tesla's cars, automotive business solely. You can see the US dollar price on the left, and you can see in the red the profit per car. And you can see here that they are clearly trending downwards, and I have like a bar for 2025, the last quarter, that's our estimation. But until this moment here, Q4 of 2024, these are actual numbers. So Tesla have been essentially going from making around 13,000 US dollar per car to this kind of 4,000 or 5,000, and it kind of looks like it's gonna continue to be at best case scenario at these levels, and worst case scenario it's gonna go much further down. Why do I say that? So we know that Elon Musk is very politically active. I don't think any kind of position on his politics. I think it's not about this channel, but you can see that there are some kind of frustrations coming in from his popularity dropping, and some part of his customers, the traditional base of electric vehicles from early 2010s in 2012, 13, 14, they are starting to kind of not like him as much as they did back then, and we are starting to see the same kind of trends in the biggest market in Europe, in Germany, where Tesla loses kind of market share compared to others. Now, usually, especially over last year, 2024, this wasn't necessarily a completely bad thing, because we know that despite Tesla being losing market share in the US and in mainly Europe, they kind of made up for that in China. Tesla in China was really strong last year, but the problem is that by end of last year and especially early this year, we have seen that, for example, the first 3 weeks of 2025, NIO and Xpeng has combined outsold Tesla in China. So in the last stronghold where they were really strong, China, they are now continuously losing market. Only now I'm comparing to NIO and Xpeng, but also to Li Auto and a bunch of other players out there. If we're talking about Zeekr, we are talking about Link & Company, we are talking about the Xiaomi car, the Huawei car. So it's a lot of different competitors out there, and Tesla is simply losing market share. That's the honest truth. In fact, if you look at the graph here and you look at the sales of electric vehicles compared between Tesla in red, NIO in green, Xpeng in blue, and Li Auto in white, they dominated almost 80% in 2020, and ever since have been steadily but surely losing market share, to the point where just between these three other players, let alone Xiaomi and the Huawei car and the BYD car and all the others, right? If you include BYD, that's what you see here, where BYD is the light green and Tesla in the dark green in China. So it's not fair to include BYD. It's a complete different market segment, most of the cars they sell. But if you forget BYD and look at Li Auto, Xpeng, NIO and Tesla, clearly see that even there they are still losing market share even in China compared to the others. So no matter how you look at it, Tesla's automotive business is not doing that great. We have also seen the long-term bulls like Troy Tesla. For the longest time he's been a bull on Tesla, at least until a couple of years ago. And it's not necessarily that he's negative on Tesla, it's just he thinks that, for example, his estimates for 2025 is 1.77 million cars sold, right? And I think most of us, if we have been honest, back in 2021, if you would have asked us how many cars would Tesla send in 2025, I think most of us would say at a bare minimum 2.5-3 million, right? And I would argue we're not going to reach those numbers by a long distance. Going to the numbers, right? On the right side, I have the estimates that I made in the column C here. for Q4, where production would be essentially 60 to 75 higher, and it came in at 459,000. And we can see delivery was fairly strong. I mean, probably the strongest ever at 495,000, almost 500,000 in one quarter, which is strong, but still lower than me and many other people believed. We can also see that the good side here, that the production cost per car kind of lowered quite a lot. It's great to see. Automotive sales much lower. We can see that the regulatory credit also was a little bit lower than I expected. And this is another point for Tesla and the earnings support that we had. If you look at their profitability, you can see that they say here that out of 2.3 billion in Q4, they had 0.6 billion US dollars, so 600 million US dollar, essentially 25%, coming on gain on digital assets, which is essentially the Bitcoin position that they hold and have been holding for like I think since 2021. And in addition to that, we have like something like, as I mentioned here, let's go quickly look at the number on the regulatory credit. You can see 692 in the actual values that they now had. So almost 700 million on regulatory, another 600-700 on Bitcoin, which is more than, as someone else said on Twitter. I think let's find the other one. We can see here, for example, that if you look at the 2.3 billion in earnings, you can see that if you remove the Bitcoin valuation increase and the regulatory credit, all the other segments of Tesla made around in 1 billion in net income. And that's not a great look for a company that, I mean, if you're investing in Tesla these prices, you're expecting to get what, even 40% this year? I think most of Tesla bulls are even wanting higher, because that's what I wanted over the past 4 or 5 years, 6 years, every year. Obviously lower expectations over the past couple of years. But yeah, so at this rate, I mean, even a 40-50% increase, you're pushing $2 trillion US market cap, and they're not making a whole lot of money. Now, the good side though is that the Tesla energy business is doing great. But even there, to be honest, I was a little bit like, let's be honest, a little bit disappointed. So if we start with this, you can see that auto sales in blue, the auto cost of sales in red, and the auto gross margin in the green line, right? It's going down, trending downwards as we always know it. We can also see now on the energy. Now on the energy side, again, look at these 2 bars here. So the energy sales in blue, and the red is in cost of sales. And the green is the gross margin. They had a gross margin of 30% in the last quarter. I was like, thinking, wow, at this kind of rate, what if, they come in at halfway, like through 30 and 40%, so let's say 35. They came in at 25%. So it's a huge kind of pressure on their margins even there. And are we already starting to see pressure on Tesla's energy business? I don't know, it's one single quarter. But yeah, the numbers was great. I mean, 25% gross margin is not nothing to, be sad about. But again, it's just, the trend. I mean, if you're valuing the company at, hundreds of times price to earnings ratio, then we would like to have these kind of margins for sustained amount of time, especially since I showed you the auto business is not doing great. So then there's a little bit about the regulatory credit, which you can see on the y-axis on the right side, and the actual deliveries in number of cars on the y-axis on the left side, and the x-axis is the time scale. You can see that the regulatory credit, other than the last part, which is my expectations for Q4 of this year, it's been between 300 to 600, sometimes a little bit above, sometimes a little bit less. And you can see that it's kind of hanging in there with the fluctuations in the deliveries. Now again, I showed you this one at the beginning of the video, the difference, essentially the average sales price in blue, and how as the average sales price goes down, the profit per car goes down much more. And that's I think a long-term biggest issue for Tesla, because they're feeling the pressure in all markets, in Germany, which is Europe's biggest market, but also in a lot of other areas in Europe where people are kind of starting to dislike Elon Musk. And you see a lot of people talk about, they're not going to buy Teslas or even sell Tesla. So it's potentially a negative kind of momentum now going into 2025. He personally is also starting to lose popularity in USA. That could also be, a heavy price to pay for the stock, I think, in the long term. And then, of course, I mentioned again in China, 2024 was great. But at this kind of rate that we have seen, on the long term, they are losing market share. That in itself is not a big issue because it wasn't, realistic to expect them having huge market share in China for the long term. But I think even if you exclude BYD, which is the biggest threat, still you can see that even if you just look compared to the smaller players, I mean, for God's sake, you can see that Xpeng and NIO combined are expected to sell, I mean, close to 700, possibly 850, 900,000 cars combined. That's essentially what Tesla sells in China every year. So if the Tesla sales in Europe and USA, North America is weak, China is not going to maybe save them as much as it did 2023 and 2024. So no matter how you look at this, I think for now, I wouldn't necessarily say it's a bad investment, because in the long term, all this, FSD and Optimus, again, I've been very critical of FSD in the short term. And we've been saying this for 4 or 5 years privately to my friends, also on this YouTube channel for a couple of years now, that I don't believe in FSD right now. Maybe in, let's say, couple of years, few years from now, possibly. But even there, do they need to have the radars, the lidars, which will again add to the cost of the cars? We can see that a lot of other car companies definitely see the need of radars and lidars. What happens when the camera is blocked, with a snowflake or just dirt, or in the night where the camera doesn't see as much? Then the radar could come in handy, or even more expensive lidars. But even the cost of lidars is going down, and essentially the cost of radars going down. You can find radar sensors very, very cheap now, almost the same cost as a cheap camera sensor that they have in the cars. So I simply, on a pure technological term, don't see why they wouldn't need radars. And then there's the question of regulatory regulations about, will you, even if the Tesla FSD is great, then there's, the security of what if one camera is down. And that raises a question about, you need to have dual or triple safety. That's when either more cameras, or in best case scenario, even radars and different type of technology combined with cameras is great. So at the current state, if I would have looked at the stock market, I think Tesla is a little bit too expensive for my liking right now. If you've been in here, I would, again, this is not investment advice, I just share my ideas. I think it would be better to look at other areas. Even despite, for example, if you look at his and hers, right? I think that company has much more potential in the short term, couple of years, maybe 3-4 years, since it's such a small company on market capitalization. And despite it being up, hugely over the past year, you can see that it's up almost 300%. I still think that intrinsically this company has much more potential in the short term. But if Tesla goes to, 200, 250, maybe even below 200, that would increase my interest, because I don't see FSD making money for a Tesla in 2025 or 2026 at least not in big numbers. And potentially we are starting to see, price pressure finally also on the energy business, which we have seen in the, let's see here, you can see the drop here from 30% to 25%. I think it's more normal to expect them to have at least below 30%. It was always maybe a perfect case scenario that for them to have an energy gross margin of above 30%. And in the long term, maybe even below 20% as the competition increases. Remember, if there was competition for the EVs, trust me, there's going to be competition for energy, because it's much less competitive and difficult to enter the energy business market. Essentially, you buy a battery pack, add some software to it, some systems, bam, you have a battery pack. But the car is much more difficult to make. So you have many less competitors out there compared to what you could have from battery energy storage business. So yeah, please like, subscribe, engage in the comments. Do you think Tesla is overvalued, undervalued? But remember that I don't necessarily say that it's a bad company for like 10 years ahead. But in the couple of years ahead, after the big run, after the video I made in March, April of 2024, I think you potentially could be better off to look at other places. So thank you for your time, and see you in the next one.